So I'm sitting here looking at the agenda, and I realize that other than the sponsor, I'm the only incumbent presenting today, but I come in peace. What I want to talk about today is, the previous speakers have spoken far more eloquently than I ever could about taking the friction out of the payment. What I want to talk about is taking away the friction between the startups and the incumbents. And we've seen it quite a bit today, quite inflammatory language, and everyone talks about they're going to eat your lunch. And I genuinely believe that by working together, we will succeed together. And I think that the innovation that the startups bring is fantastic, and that the scale the incumbents, the banks, the Visas of the world can bring is really, really valuable. So I'd like to talk about that. Let's start with the banks or the incumbents. What everyone's doing is they're looking at some of the big players like the operating systems. They're looking at the changes that have been happening to the music industry, to the business models, and frankly, they're nervous. Historically, these players have controlled the end-to-end value chain, and that is their culture. That's what they're used to historically. But today, we now live in a world where you've got a different device or a different access method, different forms of authentication, different communication protocols, creating this incredibly complex environment of, in essence, that payment chain being broken down. So the idea that was spoken about earlier, now, historically, payment has been two key decisions. Am I who I say I am? Do I have enough money? Those things will be broken down. Payment and settlement will probably be broken down. Does how I settle after I buy something need to be determined by the type of plastic I present? Possibly not. What that means and what's good for the consumer is that the smart players are taking all those elements in what I call the kind of the Lego-ification of payments and choosing and building solutions that are fit for purpose and variable, and people can adapt them. And the startups have a huge contribution to play in that, because what they are doing, instead of the large organizations, they are focusing on specific problems and trying to fix them in really imaginative, really successful ways. I think the really interesting question, though, and a lot of people have talked about trust. It is partly trust, but it's also confidence of what happens if it goes wrong. Is will some of these services be able to scale in the way they want to without the involvement of some of these larger players? And I think the jury is still out, but there's some evidence that may not always be the case. So this morning, we had a really interesting presentation from the BuildGuard guy, and I bow to no one in my respect for the service and the design of what they've got. But taking a use case of one, when I went to enroll for the service and downloaded the application, I have to admit I was uncomfortable at some of the credentials and details I was being asked to pass over in order for it to fulfill the admirable function it needs to do. What I couldn't help but think was, if this was embedded as part of a bank within what I see as the safe infrastructure, would I be more confident? Now, some people won't, but I think some people will. And these are the sort of challenges I think we need to face. But what is clear is that the incumbents are lowering the drawbridges and starting to try and work more openly with the new players, which is a great thing. So, what I'd like to do is, let's imagine you are a young startup, you are ready to fly. Generally, one of the challenges I think today is that it's great that there is so much of money available in the fintech community. I would suggest there is probably too much, because often the business case analysis has not always been done as rigorously as it could have been, or the people that are coming up aren't really looking to create a long-term business. What they're looking to do is sell their business at the earliest opportunity. What there is no doubt about is the economic models that they're talking about of capitalization and downloads is very, very different to the business models that the people they're trying to talk to of revenue, number of transactions. And there's clearly a disconnect there. I deal and meet, and I'm very lucky to meet an awful lot of startups. But I have to say there are times when I feel like I'm sitting in an episode of Dragon's Den when I'm doing that. So if you'll indulge me, what I'd like to do is share the benefit of some of the lessons I've learned in the hope that they are useful for any of you who are looking to pitch or look to try and form partnerships with some of these large players. So, in the words of Jerry Maguire, help me help you. Okay, the first thing, you would be amazed at the number of startups that walk to speak to me. And I'm left with a compelling understanding at the end of it that, okay, you want my brand, you want my money, you want my distribution. What I have no sense of is what is in it for me as the provider of that service. There's also this friction and tension in that this is not deliberate, but large organizations are regulated and have to go through procedures that may seem completely alien and unacceptable to the startup who are working really quickly, but unfortunately are often unavoidable. If someone was to ask me one of the top 3 pain points that I have with working with the startup community, it's actually getting you onto our books so that we can pay you for the services you're providing. Most large organizations have incredibly complex procedures they have to do. Many of you won't pass the credit check that's necessary to be a supplier. And there are lots of examples of where the more you can do to help prepare for that process in advance, I think would be streamlining. Because what happens is, in essence, the bank and the startup, I refer to it as kind of bullet time from the Matrix. People are operating at completely different speeds. And people understand that you're probably seeking the next round of funding and you're looking for a letter with the brand and the name to get that second round of funding. But we need to be more sympathetic sometimes to the hurdles that the organizations, unfortunately, do have to go through. If anybody's going for an interview, and let's be honest, a lot of these pitches are an interview, I'd always advise people to do their homework. The number of times when you see the organization and I'm just being pitched at with a service that isn't tailored to my need, and you're just well aware that you're talking at cross purposes. Let me give you an example. I'm not going to name the specific name, that would be unfair, but anyone who's working in payments will know that HCE, host card emulation, is a really big deal at the moment. So a startup organization came to see me with a name that spelt out HCE. I won't say what it was. All of their material, all of their presentations had HCE. We weren't yet under an NDA, and I said, since you're selling this service to merchants and to banks, I'm presuming it's HCE-based technology. No, it's not. So that lack of preparation, clearly that's going to cause huge friction and tension when you go to the customer. Prepare for that. It's also often unclear exactly what the business model or the means of distribution of how you're intending to achieve success is clear. A number of people come to me with services that are clearly probably far better to be adopted by the Adyeens of the world who fulfill a different role in the value ecosystem than Visa. Many people, I think, have done lots of multiple acquisitions of trying to be too many things, and many of those are now really, really struggling because that business model wasn't sustainable. It is a large organization's worst nightmare to be dependent on a partner who cannot fulfill the obligations from a financial or from a scalability standpoint. And therefore, there's a lot of nervousness about that, and the more clear and well thought out the plan is, the better for everyone. Everyone's targeting millennials. Every solution I see is looking at millennials. But generally, a lot of these organizations have to deal with a wide range, and many of these services are so specifically focused on the millennial that it may be hard. Because honestly, those are not going to be most large financial organizations' most successful customers. So banks hope that they can sell mortgages and an aspirational dream to create a long-term relationship. For millennials, that may not be the long-term relationship they're looking for right now, and it's not the right time to approach them. Uber is another example. There's lots of conversation around Uber, which is San Francisco-based, how it's affected car purchasing, because young millennials are now using Uber. They don't see the need to have a car. I've lived in San Francisco. What will happen is people, when they get older, marry, will generally tend to move out to the valley, and those people will probably become soccer moms. Many of them will become soccer moms, and they will be having minivans and probably not using Uber. They probably won't have a choice. I've got a very good friend who has now been blocked from Uber because she gave her father, who was babysitting her 3 young children, access to the Uber account to ferry the children around during the half term. The children were so badly behaved in the back of the cab that the Uber driver gave them such an appalling rating that she's now officially blocked from using Uber. So my point is that many of these services need to be more widely targeted because the business cases that your potential partners need to look at will be different. Don't lose sight of the reason that you guys are so valuable. The focus you bring is essential and something that's really hard to do in a large organization. And yet too many try and sell across large parts of the organization and then fall into the trap of creating these over-complex services, which is not what we want. Someone mentioned focus earlier today, and I think it's absolutely critical. To try and get away from that distraction, many organizations, Visa included, have started set up labs, and those are great as a way of fostering creativity and innovation. But I think one of the big challenges we're now seeing is if you send those rockets up, at some point they have got to dock with the mothership. And one of the key challenges is that many of these organizations have infrastructure that is really, really inflexible. And I firmly agree with the comment made earlier about creating more open marketplaces and platforms. I think that has to happen. And so I think more and more we'll be looking for new entrants or people in that space to provide the sort of ecosystem where that communication between the two respective systems can take place. Because if they don't, I think there'll always be a standoff. Separate the technology from the product. One of the questions I often get asked about is Bitcoin. And I do see, despite what was presented this morning, a separation between the currency and the technology that sits under it. Often people just offer the same product. So I'm always being offered technology that may be quite excited, but it's just being offered if it's just a rewards product. So from a point of view of currency, I think that's interesting. As Visa, we have, that's what we do. We manage currencies on behalf. I was recently in South by Southwest, though, with a number of different cryptocurrency vendors arguing, and we've talked about the kind of almost pirate mentality. And it did come across like a scene from Life of Brian with the People's Front of Judea arguing with the Judean People's Front and so on and so forth. And so I think that's going to be really interesting how that currency stabilizes and creates a framework. And like any other currency, although this may not be the best week to discuss it, as Visa, we are very keen to facilitate that translation of currencies on a global basis. But ultimately, what we're looking for is the technology and the component parts that we can bring into our platform, that we can bring into our marketplace that deliver a richer proposition. Examples of some of the things we're looking at: identification, device fraud, using cloud-based technologies to take some of the pain out of online payments, digital receipting. Those are the sort of services that we think will be value added to customers. But to summarize and close, as I said before, I think the ideas that are coming through are fabulous. We have to find a way to incorporate them, to aggregate them. And I think this is where someone like Apple have been very successful. The technology is not necessarily new, but what they're doing is packaging it in a way that's really compelling from a customer standpoint. So, although there was the argument that startups and incumbents can't work together, I think like peanut butter and jelly, as combinations that shouldn't work but can, there's great opportunity there, and I'm genuinely excited about it. And I'm also really excited at some of the new ideas and concepts and customer propositions that will be developed by people that 5 years ago no one thought would be working together. Thank you very much.
Jonathan, when is the last time you saw a startup and thought, Visa has to work with these people?
I see them all the time.
Give us a couple of examples.
So I've been working with an organization that is using and aggregating the data to give a risk score in this case. My view is that you can easily translate that into effectively creating ID scoring. Now, what I'm very well aware of is Visa is an acceptance mark of trust. What role can we play adding on top of that technology? We don't have to build it or run it to give that credibility in the space. Digital receipting is another example. A company called Inorth, who do really good device profiling to check whether or not, particularly in the case of Android, which is a real concern with routing for banks, are there ways that we can check that? Geolocation, we're the first person to know if you're trying to use your card other than you and the merchant overseas, and yet we all know that that's a really painful experience. Often your card often gets declined. What can we do to improve that? So the great news is most of the technology we want is out there. It's a question of how we bring it in and incorporate it and operate in a mutually successful business model to make that work.
But you are the incumbent.
I am the incumbent,
And
yes.
we're in a museum where there's lots of fantastic pharaohs upstairs who were in charge at one stage and then weren't.
Yes.
What do you see as the highest risk for the future of Visa?
Complacency. I think that you have to adapt, you have to learn. And I also think that the biggest risk is not recognizing where you bring value and where you uniquely bring value. I think too many people are trying to go too wide in the value chain. I think that from my standpoint, where Visa has been successful, is that we built a global acceptance network and an acceptance mark that works. We don't offer all the offers, it's the bank's plastic that sits on. And I think the opportunity for us to create that ubiquitous acceptance experience in digital is something we've done before and we should try and do again. But I think we have to focus on where we add value and collaborate with others to do that.
There's this company called Facebook that produced an app called Messenger that had 1 billion downloads in not very many months, and they've got a community of 1.5 billion people. They're now allowing you to pay for things. I mean, could that take the place of a network like Visa?
So look, most of these things are, the trick is, so the irony is I work in payments and the mark of success is if the payment is invisible. So the art is to make sure that the infrastructure and the network that we have, that if Facebook or whoever, I mean, Apple Pay is a great example. It's riding off scheme rails and using the NFC acceptance infrastructure that exists here. So by making that as frictionless to connect to and driving the customer experience, and making sure that I can use my Visa account number, it won't always be plastic, across all these different things will I think be the mark of our success going forward. And I think that we will make ourselves indispensable to those players in the same way that we have historically to some of the member banks and merchants. But I'm not underestimating the challenge.
There's a startup pitch stage next door where they're really relieved you're getting off stage now because they're all about to pitch you.
Okay.
Thank you, Jonathan from Visa.
Thank you very much. Thank you.